I think the main thing with China right now is, we're on the brink of war with China for various reasons. I hope we make it to 2050. So, the demographics as I describe it. And by the way, them losing doesn't make us winning. Just so we're look at that. We hope everyone gets better, and the world economy. We hope everybody has a better way. Everybody loses in war.
It's not just a recession, it's a global economic threat that no one is talking about. Ray Dalio uncovers it all in this video.
That's their set of circumstances, and it'll be what it'll be. I think the most important thing is, how do we deal with our circumstances? How do we become strong and healthy, financially healthy, productivity healthy, and so on? I really think we're projecting too much on the outside world. Okay, what do we do with China? Of what relevance? Well, we trade with China. We don't have to go to a military war with China. I mean, why would we shouldn't do that. And then if that's the case, what's the problem with them growing? Okay, let them grow and invent, and let us grow and invent and share the inventions. That would be good. But the problems that we're facing are pretty much our own problems, the things we're talking about, and the breakdown of infrastructure and, all of that. So really, I think we should focus on that.
Since the end of World War II, the U.S. has reigned as the supreme global power. Unmatched in military prowess, booming economy, and global influence, the U.S. has shaped international affairs as the leader of the Western world. But for how long until others catch up? That is the question now.
And there are 5 kinds of wars, and they start in this order, just sequentially, typically. A trade war, a technology war, a geopolitical influence war. Then you get into a capital and economic warfare, which we are now with sanctions. They always happened in history. And then there's a military war. In my opinion, we are at the beginning of a very classic late big cycle debt crisis, when the supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers. What's happening now, as we have to sell all this debt, is we then do you have enough buyers? There are changes now in terms of the quantities in the world that are being held by large investors around the world that have lost money in these treasury bonds and so on. And then there are geopolitical changes which are having an effect. Some cases, some countries are worried about sanctions, and then there's this geopolitical shift. So when I look at the supply-demand issue, there's a supply-demand issue for that debt. There's a lot of debt. It has to be bought, has to have a high enough interest rate. The amount of selling of government debt collapsed, right? We didn't issue government debt. And now we're going to issue a lot of government debt.
Ready to dive into the world of trading and investing? Discover platforms for crypto, Forex, and stocks at your fingertips. Click the links in the description and make a deposit to claim your bonus.
And so when we look at the buyers, there appears to be a significant shortage of the buyers for that government debt. But we're now at the brink of being able to see what that supply-demand picture looks like as we go over the next year and two. On this short-term debt cycle, I call it, the 7-year cycle, we're about halfway through. In other words, interest rates are now at a level that they're probably going to stay at, but they're probably not going to rise much from here, and there's tightness. And the consequences of that are going to be a weaker economy going forward. Doesn't have to be a big downturn because of the household sector, but it is a balance sheet kind of recession. And I think things are going to get worse in the economy. There's a financial issue at the same time as you have this internal conflict. I think it's very clear that there is only one good outcome, if we can, and that's a strong bipartisan middle, because either of the extremes is not going to be able to be dominant. the small right, or even the small left. And as a result, we're seeing a fragmentation. Geographically, you're seeing people move to different areas, not just because of taxes, but of differences in values and so on. And so you're seeing this separation. I think over the next 2 years, the real question is, can we have a strong bipartisan middle, or are we going to have that kind of fragmentation? So I'm extremely excited. I think that this is the greatest revolution, bigger than the internet revolution. But like technology, it really depends. The problem isn't with the technology. The problem is with the people who use the technology. Will that technology be used to raise humanity's living standards, or will that be used for war, in a sense, for hurting each other? And so, but any way we're going to cut it, if you take those 5, we're going to go through a time warp. If we take the next 5 to 10 years, in the next 5 to 10 years, it's like going to go through a time warp. We're going to come out the other side, and you're going to see a very completely different world.
History has shown us that no nation can remain at the top forever. America's rise to power marked the end of European colonial empires. Who's to say another country won't eventually eclipse the United States' global influence? The consequences will be devastating.
There is, I think of savings in tiers. The first tier is to secure your well-being, to own a portfolio of assets that are going to secure your well-being. And then after you have that taken care of, then you can go to the next level, take more risk, and so on. That well-being, that purchasing power, has to be viewed in terms of inflation-adjusted dollars. You know, if you're holding a debt instrument and, a cash-paying instrument, and it gives you a 2% interest, and you have a 5 or 6% inflation, you lose money at 3% a year. So you have to look at that in real dollars. And you have to hold that portfolio in a way that is balanced to any kind of economic environment. And then the way I do it, and I remember, I didn't have anything, and then I start to acquire money, and I start to think, okay, how many weeks do I have, months do I have, or years that I'm financially safe, and what do I hold it in? So, and then, once you got that taken care of, you can go beyond it. And I wanted it in a very well balanced portfolio, that type of portfolio that does equally well no matter what happens. I can explain that a little bit more if you want.
That'd be good.
Okay. There are basically 2 big influences on markets: the growth rate and the inflation rate. Like, if you know that growth is going to be faster than expected and inflation is going to be higher than expected, you know that bonds are going to go down, and vice versa. So the way I look at it is there are those 2 big influences, and then so I have 4 environments, and each one of them can go up or down. So there are 4 quadrants that I think of: rising growth, falling growth, rising inflation, and falling inflation. And I want to have a portfolio that will be 25% of my risk in each one of those, so that I don't have any bias. And so I pick the assets that are going to do well in each of those 4 quadrants, and I hold them in a balanced way. And I've tested that, going back actually to 1900 and so on, and you'll actually increase your buying power. That's the kind of thing that I think in the beginning. Then you have to also make provision for, taxes to some extent. So I say, whatever that amount of money is, I want twice as that, so in case it goes in half. And I want to build a portfolio that looks like that for, X number of years that I have that, and that's the safe savings. And then when I go beyond that, then I'll take more risk. But I think that being safe particularly in this kind of an environment, is important. And I would take a perspective of how to do that that's like the one I'm just describing. The most important thing, as I say, is to have this basic, well-diversified. And, there's some assets and think about different, a small percentage of your money, even an asset like gold, and diversification for countries, to create a diversified portfolio is important. I think cryptocurrency or Bitcoin doesn't move in a reliable way related to almost anything. It's, moves up and down because of this mood and that mood. And unlike gold, let's say, I would prefer gold and I would prefer crypto for various reasons. Crypto, it's very easy to track the owners and transactions in it. It's not liked by the government. It doesn't move in a way that's consistent with, kind of any of the environments. And it's a small asset class. We talk a lot more about it, but its size is about, 30% of the size of Microsoft, and Microsoft is one stock among many stocks. So it's given probably a lot more attention. Who knows? Maybe there's some element of it. I don't understand why people are more inclined to go to Bitcoin than gold. If you look internationally, gold is for central banks the third highest reserve asset. First is dollars, then euros, then gold, then Japanese yen. And central bankers are buying gold, and they're not buying bonds. And it's, timeless and universal. It's been there. So I'm not a big fan of it. As I've said before, having a little bit, I have a little bit of it. But if you have a little bit of it, you have to think about those things. And, like I said, you have to be prepared for it to fall a lot, if it goes down 80% or something, but that limits the amount that you can have in it. So I don't know. It's, I don't think a lot of Bitcoin. The world order was made in 1945 at the end of a war, and a civil war can begin a new order inside of a country. The Chinese Civil War began their new order 1949. And so that's like a new beginning. They always come out of wars. And a war is a fight for how the system works. So we'll begin there. After the fight of how the system works, it's a great leveler. It gets rid of a lot of the debts and it starts over. And then there's a new power. In the United States, the New World Order, it was an American world order because the United States won World War II. It had 80% of the world's gold. Gold was money. It had the dominant military power. It had nuclear weapons. And because of that, we began the American world order. They carve up the world. Here are the borders. This group gets this piece and so on and so forth. And then they begin. And by the way, this has happened repeatedly throughout history. And so they start off with those new rules of the game. And you enter a period of peace and prosperity. And it's peace because nobody wants to fight the dominant power. The dominant power won. And there's a change in psychology really that you're dealing with, because quite often these things take place. They take a generation or more to take place, a lifetime. And the people who enter the war do so boldly. But everybody who enters the war and then goes through the war wish they never went through the war because it's so terrible. But they come out and the war is over. They want peace, they want productivity, and so on. And it's a great leveler, less wealth gaps and so on. And they work well together and they build a period of peace and prosperity that is a long period of peace and prosperity. But during that peace and prosperity, more and more prosperity takes place, and they increasingly bet on that prosperity, and people get more in debt. And so you see the debt levels rise, and you see naturally, as prosperity comes, it comes in unequal ways, and some get richer than others, and so wealth gaps rise. And then those wealth gaps increasingly create opportunity gaps because the rich people have more resources to educate their children and of them the benefits. And so that happens over a period of time while the economy gets more indebted. And of course, as time progresses, other countries also rise. Those maybe that even lost the war, like Germany and Japan, they rebuild and they become competitors. And so what was a unique power of having won the war becomes less unique as there was more competition. And then you get a new generation of people who have a different mentality. They get used to those benefits and so on. And they are, let's say, less cautious in their financial behavior and so on. And so the classic ingredient also is that that country that wins the war also has the world's reserve currency. Because, okay, you need a currency to transact internationally. It's like a language, you need a language to transact internationally. And the winner of the war gets the world's reserve currency because everybody thinks that's the most stable. And they also want to save in it. So I think there are three big forces to keep your eye on. And when you see them in their cycle, then it's clear. First, are you earning more than you are spending? I want them to look at it as the country, but the country's nothing more than the aggregate of the people. And so when you look at those three forces, I want to make sure that they're clear and you could align them up and you could see where you are. Is the country earning more than it's spending and building savings? Or is it spending more than it is earning and creating debt? Because one man's debts are another man's assets. And when somebody is holding those assets and they're producing a lot more of that money and debt, money goes down in value as they produce it to produce that buying power. And then that gets people bad returns. It produces a higher amount of inflation. And then people get out of cash and bonds. And that produces rising interest rates while there's rising inflation. And that produces stagflation. So I want them to get the mechanics of that because that's happening now. You could see it. This is not controversial. We are producing a lot of debt. We're spending a lot more than we're earning. And as a result, they're printing a lot of money. And the printing of a lot of money creates a lot of inflation. And with that inflation, cash is trash. You don't want to hold cash. And you get out of that. And that causes rates to rise. And that's one of those three factors. So you can see it happening. The second force is the internal conflict force, how you are with each other. Are you operating cohesively, common mission, and moving in the right direction? The system working? Or are you at each other's throats? Is the system threatened? Because history's shown when the causes that people are behind are more important to them than the system is in jeopardy. And that is a risky situation. It's a risky situation because it produces disorder and it can produce a form of civil war. And at those times, when you have that, you see greater and greater polarity. In politics, it shows up at greater and greater populism of the left and populism of the right. And populists want to fight for their side. They're not moderates. Moderates want to work together to try to find a compromise that's best for the whole. Populists appeal to their crowd by saying, I am fighting for you. And they will fight each other. And that fight can be at the threat of the system. So in history, for example, we saw 4 democracies in the 1930s choose to become dictatorships as one side fights to the other because they become so disorderly. And we have a system right now that you could see that it is possible in elections that neither side might accept losing. And so the system becomes in jeopardy. And you see that the moderates leave the system. It can't be moderate. You have to pick a side and fight. And so you see this in the French Revolution. There were moderates in the early part of it, that recognizing that there were problems and wanting to work together. The moderates got guillotined. The polarity began. The same was true in the Russian Revolution. The same was true in the Chinese Revolution, the Cuban Revolution, and so on. Polarity gets greater and greater as there's a greater intensity to fight. And that is the internal piece. So that's the second force. And the third force is the rise of a great power, the geopolitical force that's going on, that we're seeing today with China and Russia and so on, and how that's changing. Because when the power of a country diminishes, when we get weaker financially, or how we are with each other, and so on, there are greater vulnerabilities. And there's always the competitive power that learns how to become stronger. competition always happens. There's the establishment and then there's the new competition. And as they get stronger in all ways, militarily and commercially and so on. And that's the dynamic that we're seeing. The events that happened in the Ukraine, and that is bringing all this development internationally up at a little bit quicker pace. It's the same dynamic. There are two sides and there'll be neutral countries, just like in the war, there was the Allies and the Axis powers, and then there are neutral countries. And so that part is developing. The US conflict part is probably progressing a little bit quicker. On the world order, the developments in the Ukraine, maybe I should put those in perspective. There is a very close relationship, a common objective of the Russians and the Chinese. So there is a competition in the world, and there's a dominant world power which is perceived as being overly controlling. And there are 5 types of wars. There's a trade war, there's a technology war, there's a geopolitical influence war, there is a capital war, and then there's a military shooting war. And we are in the first 4 of those wars in this competition. With China, we are in a shooting war of sorts with Russia and the Ukraine. We're providing arms, and so they're shooting. And so there's a military war going on, and we're in it in our way. So we're at those particular spots. And the capital war is sanctions. We hear the notion of sanctions. And what that means is they're economic. And the way they work is to shut off, to produce economic pain by either not letting them get at their money or not letting them get to goods that they can import. And these have happened through time. In Japan, that was what set us up for bombing of Pearl Harbor, because the United States cut off Japan's oil supply. And there are 5 kinds of wars, and they start in this order, just sequentially, typically. A trade war, a technology war, a geopolitical influence war. Then you get into a capital and economic warfare, which we are now with sanctions. They always happened in history. And then there's a military war. In my opinion, we are at the beginning of a very classic late big cycle debt crisis, when the supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers. What's happening now, as we have to sell all this debt, is we then do have enough buyers. There are changes now in terms of the quantities in the world that are being held by large investors around the world that have lost money in these treasury bonds and so on. And then there are geopolitical changes which are having an effect. Some cases, some countries are worried about sanctions, and then there's this geopolitical shift. So when I look at the supply-demand issue, there's a supply-demand issue for that debt. There's a lot of debt. It has to be bought, has to have a high enough interest rate. The amount of selling of government debt collapsed, right? We didn't issue government debt. And now we're going to issue a lot of government debt. And so when we look at the buyers, there appears to be a significant shortage of the buyers for that government debt. But we're now at the brink of being able to see what that supply-demand picture looks like as we go over the next year and 2. On this short-term debt cycle, I call it, the 7-year cycle, we're about halfway through. In other words, interest rates are now at a level that they're probably going to stay at, but they're probably not going to rise much from here, and there's tightness. And the consequences of that are going to be a weaker economy going forward. Doesn't have to be a big downturn because of the household sector, but it is a balance sheet kind of recession. And I think things are going to get worse in the economy. There's a financial issue at the same time as you have this internal conflict. I think it's very clear that there is only one good outcome, if we can, and that's a strong bipartisan middle, because either of the extremes is not going to be able to be dominant. The small right, or even the small left, and as a result, we're seeing a fragmentation. geographically, you're seeing people move to different areas, not just because of taxes, but of differences in values and so on.
Thinking of investing but don't know where to start? Whether it's crypto, forex, or stocks, we've got the best broker for you. Click the links in the description and make a deposit to claim your bonus.
The classic movement, of course, as rates go up and money becomes tight, you lose the parts of the economy, the parts of the market that are the bubble parts that needed the cash flow, right? So you see the tech stocks come down, all of that come down. You see private equity, you see venture capital because they needed cash, all of that comes down. So you could see which sectors are going down. You could see which stocks are going down, right? You see the tech stocks, you see real estate going down. Residential real estate goes down, and we're having something close to a let's say a stagflation, meaning maybe 3.5. I think you're going to see inflation come down to this, and then because of the way it's calculated, it'll go up a bit. And so you see that kind of an environment with something close to maybe a 1% growth rate, something like that. But I think that this type of recession is not a bad recession. It's a lot less bad than I thought it would be because of the fact of how it's distributing and shrinking that credit. At the same time, though, we have a real issue for the United States debt in the world because we're selling all this debt. You know, if you look at wealth, instead of GDP. Wealth is a much better indicator of things. GDP is like looking at revenue. How much did you sell? We have borrowed a lot of money, okay? And now we're having a problem selling that money around the world. And it's also happening that this political situation, geopolitical situation, is weakening the demand for U.S. bonds. The biggest issue is that there's more spending, and I would say there probably needs to be more spending than we have income. And that's a problem, right? Governments run the same as your household or a business in that, with two exceptions. They can print money and they can tax, right? So then when you spend more than you earn, the question is, and they're going to spend more than they're going to earn, where are you going to get the money from? Are you going to get it from taxes? And if you get it from taxes, people fight because they don't want to give up their money. Or are you going to get it from printing the money? And so how do you achieve that balance? Because do you spend less? Well, it's a tough environment to spend less. You have to spend more on defense. You have to spend more on rebuilding. The Green Initiative is expensive. I mean, education is expensive and so on. So there's a dilemma that she is sitting in, that we as a country are sitting in. So, how do you solve that problem? I think that, if you were to, let's say, take the bigger picture, there's a lot of things that you can invest in that will produce returns. And I think, for example, I don't think we invest nearly as much in the basic things like great education and making sure that certain areas do not have conditions that are substandard conditions. And so to invest in those things that are going to produce productivity. Education's a good thing. Infrastructure's a good thing. Other things. But this is part of a cycle, a big cycle that has happened over and over and over again. I think the markets as a whole they were obviously, I would say, the interest rate changes were obviously had to come. The impact on the other markets had to come. They have come. They have been into the price. So now you're going to have probably a tightening or a tighter monetary policy than existed. And that's a net negative for the stock market, but not in such a big number that it's like a big bearish thing. So when I look at the market as a whole, I would say, okay, well, now it seems closer to fairly priced, probably still a bit high, given that whole picture. The same things happen over and over again through time for basically the same reasons. A lot of these things happen once in a lifetime. If you don't go back and see how they worked over time, then you're in trouble. So there's a pattern. I could describe the pattern, but there's a pattern that happens over and over again, and we're in a particular spot in the pattern. And then to understand it, not just because it happened before, but to understand mechanistically how it happens, and then one has a sense of how to deal with it. Just like in 1929 to 1932, there was a debt crisis that came as a result of an excessive amount of debt in the boom years. And then when you have that in 1932, we hit zero interest rates. And when they hit zero interest rates in 32, like in 2008, central bank prints money and buys financial assets. And so what happens in these cycles is that normally central banks can stimulate the economy by lowering interest rates. But when you hit zero interest rates, that doesn't work. So the last time it hit zero interest rates was 1932. And what they did in 1932 was the same thing they did in 2008. And that is that the central banks prints a lot of money and buys government bonds. And so we're doing that now.
And just to be clear, the reason that they're doing that is so somebody has bought a government bond. The government is basically saying, hey, you, dear person, lend me the money. I'm going to build something, roads, whatever, but I'm going to pay you back in a year, 2 years, 10 years, whatever, plus interest, I would assume. That makes it worthwhile. And the reason that the government is going in and buying those is to get back liquidity to the people that have loaned them that money?
Yes, because think of it this way. The central government, and also companies and individuals, don't have the capacity to create money. So the central government has the right to determine they can tax people, they can get money from people, and they can spend money on whatever they want to spend money on. But they don't have the right to print money and create money and credit like the central bank does. Central bank is the Federal Reserve. Similarly, the Federal Reserve does not have the right to spend money and determine how it's spent. That's for Congress. Every individual, every company, and every government has a certain amount of money that comes in the form of income, a certain amount of expenses, then a certain amount of savings. So you do individually, and all your listeners do. And it works the same way for everyone, so that if their income falls to be less than their expenditures, they're in trouble unless they have a good savings. And then they go to the savings. So all around the world, there are lots of entities that are in trouble in that way. So the government, the two parts of the government, the U.S. government, two parts, want to give checks to people. Now, it's difficult to decide who gets it, who doesn't get it. But if they don't give checks to people or to companies, those will go bankrupt because they may not have enough savings. So you saw J. Crew went bankrupt. And you'll see others go bankrupt because they don't have enough. And so when they go bankrupt, then that's a whole other process. So in order to prevent that, they have to give money. And so they print money. We call it print. There's not even paper much. It's digitally create money. And then that comes in the form of loans.
Okay, so basically they're digitally creating money, which they're allocating to the government. And then the government is deciding how to disperse those funds?
Yeah, the Federal Reserve will buy government bonds, so it's a transaction of buying it, and they will also buy private bonds. They might pick a company, many companies, and they'll say, I will buy your bonds, which is the equivalent, I will lend to you. And that's happened through history. So what we're going through is the same process as happened in the 1930 to 1945 period.
So what can the average person take away from that? They don't have bonds. They don't think like that. They may not even understand what their 401k is, or they may not even have a 401k. How do they navigate this? Is it just head down, do your best to weather the storm? Or is there actually something that they can learn from the historical perspective and move on now to make this easier for them?
It's the same for every individual, same for every company, same. And if you understand this, then you understand. There are three things. The first is look at your income, your expenses, and your savings, and then do a stress test so that you get yourself secure. If you were to lose your income, or if the income were to fall beyond a certain level, and you play that out, maybe that means you go get unemployment insurance, or whatever. How long can you live in an acceptable lifestyle? And do you have a saving that is adequate for that? Okay, so what you do is you calculate, if I lived in a simpler lifestyle, I had this amount of earnings, how many months, how many months or years. Could I live acceptably? Then you look at what do you put the money in?
What countries or what periods of time has going through this kind of crisis been managed well so that we come out the other side with as little sort of pain and suffering as possible?
Well, an example of would be the differences in the way Roosevelt did it. So again, 1929 to 32, interest rates hit zero. They print money. We had a large wealth gap. And then they sat down and they figured out, how do we keep it orderly and how do we change the circumstances with whether it's taxes or how do you reorganize it so that the system works well. There is a risk also at the same time, because the world is going through that, there's a risk of conflict. So in Germany, Hitler came in power in 1933, and he came in power in 1933 because there was a lot of internal fighting as to try to produce order, because everybody, the left and the right, the communists and the fascists, and they're all fighting about wealth, because everybody's fighting about wealth when you have a downturn. And then they were democracies. 4 democracies existed then that chose not to be democracies because they became so disorderly that they wanted some strong leader to take charge and run the country. And then, of course, we had a bunch of those types of leaders, and then they had a war. That's how World War II happened. So when you look at that, that's kind of the political landscape. But back to the average man in terms of his finances, I would say the important thing is those 3 elements: to have a plan, and maybe to have a plan with both your family.
Think about that. What's the importance of education we start thinking about protecting successive generations? How much of that comes down to education?
Education is the most important thing. I was raised with a very modest economic background. My dad was a jazz musician. My mom was a stay-at-home mom. But I was lucky to have parents who cared for me. And I went to a public school. I got a good education. And I came out to a world of equal opportunity. And I believe that those are fundamental necessities, that you have to know how to have an education. Facts like you have to know how to read, write, and arithmetic, but you also have to know how to behave well with others, to be a good citizen, operate in a civil way, to be able then to go into jobs. That education can be anything that works. I think the big thing is, 3 big things on what I think work should be. Make your work and your passion the same thing, and make it economic. If it works, that you love your work, you'll probably be better at your work. And then you find so you want those things, and then there's the economics of it. So it could be anything from learning trades, whatever it may be. Education certainly does not have to be college. College is overemphasized.
As this next 3 to 5 year part of the cycle hits us, what is one thing that people can do that, from the historical perspective will most insulate them from the probably emotional and maybe financial damage, whatever you think is more important?
The things that I thought about, some of the things I mentioned earlier, the plan for the worst case scenario and make it terrific is one of the things. The understanding how to triangulate well to deal with whatever problems that you're going to face, and how to work that through to find the path and find your nature. But also, one thing that's helped me a lot is meditation. Meditation gives you a calmness, an equanimity, so that you can almost look at your circumstances and you can navigate it with a clarity of thought without all of that stress. It's healthy because it reduces stress, and it also makes you smarter to make the decisions well. So I would say that would also be something that I would recommend. Because if you have the equanimity, that centeredness, that calm centeredness, and you have your plan, and you triangulate well with others so that you can get all the best advice and don't have to approach it in your own head, you're a long way there.